Okay, so, it feels like things are really kind of accelerating, like there's a palpable feeling of change in the air, and I'm sure many of you are picking up on that too.
It's definitely a time of transition.
For sure. And on that note, today on the deep dive, we're going to be taking a close look at where this whole fiat currency system might be headed and what that could mean for, well, all of us.
Yeah, the implications are pretty huge.
Absolutely. So to help us kind of make sense of all of this, we're drawing on some really interesting insights from a recent discussion between financial experts Clif High and Rafi Farber.
These are two guys who really know their stuff.
They really do. And we're specifically pulling from a YouTube video titled The Best Interview Clif High with Rafi Farber, Fiat Money Endgame. And our goal today is to really try to understand, based on what they're saying, what kind of shifts might be coming down the pike, both economically and for society as a whole.
It's a pretty big question, what's the end game for fiat currency?
Yeah, absolutely. So I guess the first thing is to really try and understand the core problem they're identifying.
Well, I think the key point they both make is that the global fiat currency system has some inherent instability built into it.
Okay, how so?
Well, think about it this way. Unlike older systems where currencies were tied to something tangible like gold, fiat money basically relies on trust in the government and their word, really.
So it's like a promise, but what happens when that promise is broken?
Exactly. And they both trace this whole modern system back to 1913 with the creation of central banks, the Federal Reserve being like the big dog at the top.
Okay, so we're talking about a system that's over 100 years old at this point.
Right. And Clif High, he has a pretty clear view on what happens when a fiat currency starts to fail. He actually says that the conditions that lead to its failure also lead to war. They kind of go hand in hand.
Wow, that's a pretty strong statement.
It is, and he even sees all of the conflicts happening all over the world right now as evidence of that principle in action.
So he's basically saying that the current system kind of creates the conditions for war to break out.
Yeah, and he actually even puts forth a timeline, which I find fascinating. He's suggesting that around June, we're going to see a kind of emotional peak of what he calls the big ugly.
Okay, that sounds ominous. What does he mean by that?
Well, basically, he's talking about a period of real intense social unrest and upheaval, and he thinks things are really going to start to heat up this month, even in May.
And I mean, we're already seeing signs of that, right? You just have to look at what's going on in France right now with all of the protests about pension reforms and austerity.
Yeah, I mean, people are already on edge, and it doesn't take much to push things over the edge, and that really plays into what Rafi Farber has to say about the potential end game here.
Oh, okay, so what does he see happening?
So, like Clif High, he also believes that the decline of the dollar is essentially inevitable, like it's just a matter of time.
But his outlook seems a little bit more optimistic, or at least he seems to focus on the potential upside.
Right, so he's really focused on this idea of a massive shift in purchasing power. He thinks it's going to move away from those who are holding on to those government-backed currencies.
And toward those who hold things like gold and silver, right? What he calls real money.
Exactly. He sees them as having a kind of inherent value that fiat currencies just don't have.
And his reasoning for that is actually pretty interesting. He points out that even the system we had before we went fully fiat, the Bretton Woods Agreement, that still had gold redeemability at its heart.
Right, so even when the direct tie to gold was loosened, the whole system was still underpinned by it. And his point is that even today, gold and silver remain that foundational layer. It's just become less obvious.
And we've actually seen some real turmoil in the precious metals market recently with that whole situation with the London Metal Exchange.
The LME, yeah, that really threw things into disarray for a while.
It did. And it kind of underscores the volatility that can exist in these markets, even for something as supposedly stable as precious metals. Now, Clif High, he actually makes a really important distinction when it comes to the terminology here.
Oh, yeah. What's that?
He talks about the difference between the word dollar, which we all use every day, and the Federal Reserve note, which is that actual paper currency we have in our wallets.
Okay, so he's getting really specific about the actual instrument of exchange.
Exactly. And I think it's an important nuance, because it highlights how we often talk about these concepts without really considering what they actually represent. But despite this difference in terms, both he and Rafie, they agree on a really fundamental point here.
Which is?
They both see the current financial system as ultimately balanced, precariously so, on the perceived value of gold.
So even if it's not directly tied anymore, gold is still the bedrock.
That's what they're saying. And Clif High, he actually goes a step further. He argues that social unrest isn't just a possibility in this scenario, it's unavoidable.
Oh, wow. He's really painting a bleak picture.
Well, he's basically saying that it's not just about the monetary value disappearing. It's about that emotional connection that people have to their money, their ability to buy things. And when that starts to erode, when they feel like they're losing their purchasing power, well, that's when things can really get out of hand.
Makes sense. People get really attached to their money.
They do. And so this brings us to the big takeaway for our listeners. They're both suggesting that a massive wealth transfer is on the horizon. It's likely to move away from those who are holding primarily fiat currency and towards those who have moved their assets into things like gold and silver.
Right. So it's not just about the dollar losing value. It's about where that value goes.
Exactly. And Clif High makes another really interesting point here. He points out that there are over 140 central banks currently participating in this system, and he calls it an illusion.
Okay, so he sees the whole thing as a kind of house of cards.
Yeah, essentially. And he thinks that the unwinding of this illusion is going to cause a level of anxiety and what he calls histrionics that we've never seen before.
So he's basically saying that people are going to freak out.
In so many words, yeah. And he also raises a really big concern about a potential shift in global financial power.
Yeah. Okay. In what way?
He suggests that as Western liberal democracies and their banking systems start to face these really big challenges, that power could shift towards the Chinese banking system.
That would be a huge change in the global landscape.
It would. And a lot of it has to do with, how much debt is owed to China and all these credit swap agreements that are already in place.
It's almost like the groundwork is already laid for this kind of power shift.
It really is. And Clif High even mentions some interesting language he's hearing within Chinese banking circles. Apparently, they used to talk about China as the land of empty containers, referring to all the shipping that was going on.
I remember that phrase.
Well, now they're talking about it as the land of the empty vault in a financial sense.
Oh, wow. So they're actually starting to see this potential shift themselves.
It sounds like it, and it paints a pretty concerning picture, for sure. But okay, let's turn our attention now to some of the more immediate banking turmoil that's been happening.
Well, Rafi Farber, he really delves into this, starting with the collapse of Silicon Valley Bank, SVB, and then how that sort of spilled over into the whole situation with Credit Suisse.
Right, and a lot of people, they saw SVB's failures being pretty simple, like maybe a woke board making some bad decisions. But Rafie really pushes back against that kind of surface level explanation.
Okay, what does he say is really going on then?
Well, he points to the inherent weaknesses of a fractional reserve fiat system. Like, think about it. The banks, they don't keep all of our money in a vault. They lend out most of it, only keeping a small fraction in reserve.
That's always kind of freaked me out, to be honest.
It is a little unsettling, right? Yeah. But the system works. Generally, until it doesn't. It becomes really vulnerable when a lot of people want their money back all at the same time. And he argues that banks that were already operating on the edge, lending at super low interest rates to all these kind of speculative ventures, a lot of tech startups, even some alternative food companies, those were the ones that were really exposed in this current environment.
So he's not letting them off the hook entirely. He's saying there was probably some mismanagement going on too, but he's framing these failures as being almost inevitable within the current system.
Exactly. Like they were basically set up to fail, given the circumstances. Now, the situation with Credit Suisse is particularly worrying because of their role as a major counterparty in the derivatives market.
Okay, can you break that down a little? What does that actually mean?
Sure. So derivatives, those are complex financial instruments that derive their value from an underlying asset. And Credit Suisse, they hold hundreds of billions of dollars in these derivatives.
Okay, so they're essentially on the other side of a whole bunch of financial agreements.
Exactly. And that creates what's called counterparty risk. So think of it like this. You have insurance on something, right? The company you're insured with, they're your counterparty.
Okay, I get it.
If that insurance company goes belly up, well, your insurance policy might not be worth much.
Right. It's the same with these derivatives.
Exactly. So if Credit Suisse goes under, anyone who's using them to hedge their bets, let's say in the futures market for commodities like oil or wheat, they risk those hedges becoming worthless.
Wow, that's a huge ripple effect.
It is. And it could lead to a domino effect, right? If a big bank like Credit Suisse fails, it could freeze up the whole futures market, and then you've got everyone scrambling to cover their short positions. potentially leading to a short squeeze across all these different commodities.
And a short squeeze, that's when people have bet on a price decrease, but then are forced to buy back the asset at a higher price to limit their losses.
Exactly. And that can lead to really rapid and widespread inflation, maybe even hyperinflation.
So it's like a lose-lose situation. Either central banks bail out the failing institutions by printing money, which devalues the currency, or there's a massive collapse that throws everything into chaos.
And both paths, according to these experts, lead to massive currency instability. Now, they also mentioned reports that Credit Suisse had this long stock, short gold trading position that they'd held for years.
Okay, so they were betting that bonds and stocks would perform well while gold lagged behind.
Right. And now they might be forced to reverse that whole strategy, which could further destabilize things. On top of all that, there are reports that Saudi Arabia has pulled its financial support from Credit Suisse.
Oh, wow. So even their backers are losing confidence.
It seems that way, and this is where things start to get really interesting geopolitically, because this withdrawal from Saudi Arabia ties into the whole issue of the petrodollar system.
Okay, remind me, how does that work again?
Well, it goes back to that historical agreement between the U.S. and Saudi Arabia, brokered by Nixon and Kissinger, where Saudi Arabia agreed to price all of its oil sales exclusively in U.S. dollars.
Right, so that created a huge global demand for dollars.
Exactly, and that's been the system for decades. But now there are reports that Saudi Arabia is making deals to sell oil to other countries like Russia in their own currencies.
So they're potentially undermining that whole petrodollar system.
It certainly looks that way, and this is what Clif High sees as part of a much larger unraveling of the established global financial order.
He's even calling it American Revolution 2.0, which is quite a statement.
It is, and it really feels like we're in the middle of a major turning point, both in terms of geopolitics and the global financial system. Now, to add to all of this, we've got some potentially concerning statements coming from Janet Yellen, the U.S. Treasury Secretary.
Oh, what did she say?
Well, she basically indicated that certain banks, what she called preferred banks, would have all of their depositors made whole.
Even above the FDIC limit.
Even above the limit. But she implied that other banks might not get the same treatment.
Wow, so she's basically creating a two-tiered system.
It seems that way, and you can imagine the kind of concern and consternation this is causing among smaller banks and their customers.
It's like they're being thrown under the bus.
And it raises the question, why would they do this? What's the strategy here?
Well, one of the theories that both Clif and Rafi discussed is that this could be a way to push people towards central bank digital currencies, CBDCs.
Oh, okay, so like that digital cash that's issued directly by the government.
Exactly, and they even mention that upcoming FedNow payment system as a potential step in that direction.
Which is kind of modeled after systems like PayPal, right?
Right, and so the thinking is that by making people feel less secure about traditional banks, they'll be more likely to embrace this centralized digital system.
Which raises all sorts of questions about privacy and control. And they pointed out that Yellen's statements have already triggered a kind of contagion effect, where people are starting to move their assets into things like precious metals as a perceived safe haven.
It's like they're losing faith in the whole system.
And that brings us full circle to what Clif High was saying earlier about the potential death of fiat currency leading to social unrest and a wealth transfer.
Right, and he specifically agreed with Rafie that holders of physical precious metals like gold and silver would benefit, but he also included Bitcoin in that category, noting its potential for international transactions.
But he stressed that what feels different this time around is the scale of the potential disruption. He thinks that a much larger percentage of the population will experience a loss of purchasing power.
So it's not just going to be a small group of people who are affected.
Exactly, and to illustrate this point, he drew a parallel to pre-revolutionary North America. Back then there were all these different currencies circulating, often tied to gold and silver, and when that system collapsed during the revolution and they lost access to trade with Britain, the colonies had to become self-sufficient very quickly.
That's a really interesting historical parallel.
It is, and he projects a similar scenario today. If the dollar crashes that flow of goods from places like China, it could stop pretty quickly, and we might be forced to rely on local production much more.
That's a pretty radical shift to consider.
It is, and Clif High's overall outlook is pretty stark. He's predicting an economic disruption that will make the Great Depression look small.
Wow, that's a scary thought.
It is, but he also suggests that it could lead to a much smaller role for the federal government and a potential end to the influence of these international entities.
So it's like a really painful reset, but with the potential for greater national sovereignty in the long run.
Right, a real shakeup of the established order. Now, they also talked about this concept of a haircut for bank depositors.
A haircut. What does that mean exactly?
Well, they were referencing analysis from David Morgan and a roundtable discussion on this topic. And basically, a haircut would mean that depositors could potentially lose a portion of their money in the bank.
Oh, wow, that's pretty drastic.
It is. But Rafi Farber, he expressed some skepticism about a direct nominal haircut where they just take a certain percentage from everyone's accounts.
What is that?
He thinks it would trigger an immediate bank run. Everyone would be rushing to pull their money out if they thought they were going to lose a chunk of it.
Right, that makes total sense. It would completely destroy any remaining trust in the banks.
Exactly. So he thinks a more likely scenario is what he calls a hyperinflationary haircut.
Okay, what does that look like?
Well, this is where the value of the money in your account just rapidly diminishes because of runaway inflation. So the number in your account might stay the same, but its purchasing power would plummet.
So you're still losing money, just not in a direct way.
Right, it's more insidious, but it achieves the same outcome for those in power. And it's interesting, they brought up the Fed's recent move to guarantee 100% of eligible deposits, even those above the FDIC limit.
Okay, so that sounds like a good thing on the surface.
It does, but they suggested that it could actually be a way to stave off an immediate collapse, to prevent a bank run, and that it could actually be a precursor to hyperinflation.
So they're essentially kicking the can down the road.
It seems that way, and Rafie made a really interesting point about the potential role of silver stackers during a major monetary meltdown.
Silver stackers, those are the people who are hoarding silver.
Right. In essence, yeah. But he had a really insightful argument. He pointed out that our whole modern economy, it relies on this division of labor, right? Different people specialize in different things.
Right, so we're all interdependent.
Exactly. And for that system to work, you need a stable medium of exchange that everyone trusts. And his point is that if fiat currency fails, people are likely to turn back to things like gold and silver for those basic transactions, at least initially.
So those who have physical silver on hand would be in a good position to, I don't know, barter for goods and services.
Exactly. And he specifically said that silver stackers could play a really vital role in facilitating essential economic activity during a crisis. Like someone with silver could pay a farmer for food, for instance, which would help keep those crucial supply chains going.
It's like a back-to-basics kind of scenario.
It really is. And he contrasted that with the likely decrease in demand for jobs in industries that are considered non-essential during a crisis.
Right, so things like entertainment or luxury goods, those would take a back seat to basic necessities.
Exactly. And it really highlights the importance of having some form of tangible, portable wealth when the established systems start to break down. Now, I know a lot of you listening are probably wondering, what should I do with my money right now?
That's the million-dollar question for sure.
And Clif High's advice was pretty clear. Diversification is key, especially in times of extreme uncertainty. He literally said, it is all of the above.
So don't put all your eggs in one basket.
Right. His suggestion is to spread your resources, keep some in the bank, but be aware of the risks, get some physical silver, stock up on some food and seeds, because even if some of those things lose value or become harder to get, you'll still have a variety of options.
It's like a hedging your bets strategy, but for your whole life.
In a way, yeah, it's about preparing for a range of possibilities. Now, Clif High also talked about this idea of a cultural revolution happening in the United States, and he drew some really interesting parallels to what happened in China under Mao Zedong.
Oh, wow, that's a pretty heavy comparison.
It is, but he pointed out some similarities, like a potential generational divide, a kind of targeting of established institutions and norms, what he called the old. And he even used the term Munchausen's by proxy to describe some of the dynamics at play.
Munchausen's by proxy. Isn't that a psychological condition?
It is, yeah, but he used it in a more societal sense, and it's a pretty interesting concept.
Okay, I'm intrigued.
So Munchausen's by proxy, it's where a caregiver, often unconsciously, seeks attention and validation by inducing or exaggerating illness in someone they're caring for, like a child. And Clif High suggests that something similar might be happening on a societal level.
Like someone is intentionally creating a sense of crisis or sickness to gain power.
That's his theory, yeah. And he sees it manifesting in things like what's often called wokeism, discussions around transgender identity, and the whole focus on climate change.
So he's saying that these things are being used to manipulate people.
Essentially, yeah, he thinks they're creating a sense of fear and dependence on those in power.
And he connected it to Mao's Cultural Revolution as well, right?
He did. He said similar manipulative dynamics were at play there, and he argued that we're seeing this weaponized against the population today. He even questioned the dominant narrative around climate change, saying that humans don't actually add energy to the planet, we just convert it.
So he's essentially challenging some pretty fundamental assumptions there.
He is, and he put all of this in the context of what he called fifth generational warfare.
Okay, what's that?
It's essentially warfare that's focused on controlling people's thoughts and beliefs, not just their physical territory.
So it's like a war for the mind.
Exactly.
Yeah.
And he believes that by recognizing this dynamic, by understanding how it works, we can start to see through these manipulative narratives and potentially flip the tables on those who are trying to control us.
So knowledge is power in this case.
Absolutely. And he even suggested some practical steps, like publicly questioning politicians who seem to be exhibiting this kind of behavior, even demanding psychological evaluations.
Wow, that's a pretty bold move.
It is, but he thinks it's necessary. He even predicted that it'll take another 7 to 9 months for the general public, what he calls normies, to really grasp the extent of this warfare that's being waged on their minds.
So we're all kind of caught in this psychological battle right now.
That's what he's suggesting, yeah, and it's definitely a lot to unpack. But okay, let's bring things back to the more immediate situation, specifically the potential fallout from Trump's arrest. They actually outlined a possible timeline leading up to May 1st.
Okay, what are they anticipating could happen?
Well, Clif High introduced this concept of a Dick Algae moment.
Dick Algae moment. That sounds interesting.
Right, so basically he's talking about a point where there's a complete breakdown in the willingness or ability to fund the government.
Like nobody wants to lend them money anymore.
Exactly. And he suggested that this moment, this potential government paralysis, could coincide with May Day if all these pressures, the Trump arrest, the financial instability, if they all come to a head around that time.
That would be a pretty chaotic start to May.
It would, for sure. Okay, let's switch gears now and talk about the precious metals market, specifically silver, which we know is something a lot of our listeners are interested in.
Yeah, silver seems to be on everyone's mind these days.
It does, and there's often this feeling that the silver market is kind of a rigged game, even though it has all these real-world uses.
Right, like it's both an industrial metal and a potential form of money.
Exactly, and Rafi Farber, he talked about how he sees two distinct prices for silver.
Right.
A lower consumer price based on its industrial use, and then a much higher monetary price that reflects its potential role as money.
So like two different valuations depending on how you're looking at it.
Right, and his point is that as this fiat system unravels, those two prices are likely to converge.
So the monetary value will become much more dominant.
That's what he's suggesting, and it could lead to a pretty significant price increase. They also talked about the potential price of gold, and they threw out some hypothetical scenarios.
Like what?
Well, they considered a situation where the dollar still had 100% backing in gold reserves, assuming that Fort Knox actually holds what they say it does.
Okay, and what would that mean for the price?
Well, they estimated that gold would have to be somewhere between $40,000 and $50,000 an ounce to account for the current money supply.
Wow, that's a huge jump from where it is now.
It is, but they also acknowledged the possibility that those gold reserves might not even exist, or that they're not accessible.
Which would mean the dollar would essentially become worthless.
Right, and then we'd really be back to using physical gold and silver coins for transactions.
So having physical metal would be absolutely essential.
It would, and they both cautioned that in a systemic collapse, paper instruments like gold and silver futures and ETFs, they might not be redeemable for the actual metal.
Right, so it's the physical stuff that really matters.
Absolutely. And before we move on, they had a quick aside about the importance of sleep during times of stress.
Oh, yeah, I think we all need to hear that reminder right now.
For sure. And Clif High mentioned a product that he's associated with called Pure Sleep, highlighting the role of GABA in the body's repair processes.
GABA, that's an important neurotransmitter, right?
Yeah, it is. And they also mentioned nattokinase as a potential supplement for those who've taken the mRNA products.
Okay, so some practical health tips in the midst of all this financial chaos.
Absolutely, because we all need to take care of ourselves, especially when things get crazy. But let's get back to the long-term outlook for silver. They referenced some older data from the WebBot project, which had predicted a potential price of $600 an ounce.
Wow, that's a pretty significant increase.
It is. And Clif High reiterated his view of the current situation as a deep spiritual war.
Okay, what does he mean by that?
Well, he sees it as a conflict between those who, in his view, create fiat currency for evil purposes and those who want a more spiritually sound and debt-free system.
It's like a battle between good and evil playing out in the financial realm.
That's how he frames it. And he sees the general public, the normies, as being caught in the middle, often manipulated and confused.
It's like we're all pawns in this bigger game.
In a way, yeah. And he emphasized the importance of people of solidity, individuals with strong morals and ethics, to stand firm and guide others through this.
It's like we need those moral compasses to navigate this chaotic landscape.
Exactly. And Clif High again stressed the need to distinguish between the U.S. dollar and Federal Reserve notes.
Right, that's subtle but important difference.
He acknowledged that there might be gold at Fort Knox, but he questioned whether the Fed actually has a legal claim to it since 1964.
Okay, so it's not just about whether the gold exists, it's about who controls it.
Exactly. And he thinks that the unraveling of the derivatives market will be an early sign of the approaching hard stop, which he thinks could happen around May.
And what will that look like?
Well, he thinks it will expose all these illicit activities and corrupt projects around the world, and it could lead to widespread anger and social unrest.
He even referenced some old WebBot reports that talked about the flaying of politicians and media figures.
Yeah, he used that metaphor to describe a coming reckoning for those who have been deceptive or acted in bad faith.
It's a pretty graphic image.
It is, and it gets even more interesting because they discussed the arrest warrants for Trump and Putin, the one from the ICC.
Right, I'd almost forgotten about that.
Well, they suggested that those warrants could be fallback maneuvers in this broader geopolitical struggle.
So, like, a way to maintain control if other strategies fail.
It's a possibility. And they even brought up the destabilization of Kazakhstan last year and drew some parallels to what could happen in North America.
Okay, now this is where things get a little bit too out there for me, I have to admit.
I get it. It's definitely a lot to process. But they suggested that Ukraine could potentially be a fallback position for certain interests if things really go south.
So it's all connected, even if we don't fully understand how?
That's what they're implying. And Clif High even referenced another show, the War Correspondent Show, for more background on what he called the 5G mind war.
Okay, that's definitely a whole other rabbit hole to go down.
It is, but it highlights how much is happening beneath the surface, things that most people aren't even aware of. Now, they also talked about the timing of the Russia-Ukraine conflict.
Oh, right. I was wondering about that.
Well, they suggested that Russia could have potentially ended the conflict much sooner, but that they might be intentionally prolonging it for psychological warfare purposes.
Okay, interesting.
Yeah, the idea is that they're trying to force the general population to confront certain realities, to wake up to the bigger picture.
So it's not just about military objectives, it's about shaping perceptions.
Exactly, and he talked about how they're using things like feints and strategic timing, holding back their full force as part of this psychological strategy.
It's almost like they're playing chess with the world.
In a sense, yeah, and he emphasized that the situation is likely to get even more complex and potentially even scarier moving forward.
So it's not going to get any easier from here.
His advice to listeners was to try and center themselves amidst all of the drama, to recognize that this tension is being deliberately created, potentially to force us to change our minds about some pretty fundamental things.
Okay, so a lot to think about, that's for sure.
Absolutely. So to kind of summarize what we've learned today, both Clif High and Rafi Farber, they're saying that this fiat currency system is coming to an end, and it's likely to result in some pretty big economic and social upheaval.
And they both see precious metals as playing a key role in navigating this transition.
Right, and the immediate future is really uncertain, especially with this whole situation with Trump and the potential fallout from his arrest.
It feels like we're on the edge of something really big.
We are, and we encourage you to really consider what they've said and to do your own research. If you want to delve deeper into Rafi Farber's analysis, you can find his insights at The Endgame Investor. He's even offering a 2-week free trial for new subscribers, and you can also check out his Patreon and his YouTube channel.
And if you're interested in Clif High's work, you can follow him on Substack and find his videos on BitChute. And we'd also like to plug some upcoming shows on Beyond Mystic, We've got the War Reporting Show this Wednesday, a decode of Pluto the Destroyer on Thursday, and Penny Kelly will be back with us soon.
And don't forget about the special discount on the yearly Insider Access Pass at beyondmystic.net. Use the code BANKRRUN50 at checkout to get 50% off. Plus, for those of you who are looking to buy silver, we've got a partnership with Miles Franklin. Check out the links at beyondmystic.net for U.S. listeners and mfbullion.ca for our Canadian friends. And we've also got our own line of Beyond Mystic silver bars, including the new Sending Ravens design.